And today's guest is Simon Dixon. You can find him at Simon Dixon Twit. Left investment banking in 2006, co founded the investment platform Bank to the Future in 2010. Simon, many thanks for coming on Kennedy Financial. How are you, sir?
Really good, thank you. Thanks for having me. Very, very interesting times in financial history. So I look forward to seeing what we talk about.
Yep. Very good to have you on. We got a lot to discuss. Just getting a little feedback there in case my feed's coming through your phone. We have so much to talk about, and the best place might be to go over to your YouTube channel just to look at some of the recent videos you've put up. You are a consummate content creator, but let's just talk about the very first thing there right at the top. You say, I'm all about making our financial system stable, sustainable, and inclusive. That's what we're trying to do over here on Kennedy Financial as well. What does that really mean to you, those three words?
Well, as someone that used to work in banking, I really believe that there's systemic parts of the financial system that we're all the people in finance and us individually, us contributing as pensions, us even just simple things like the house we live in. They all contribute to a financial system that, through the decades and decades of financial engineering, has brought us into where we are today. And where we are today is one of the largest regulated Ponzi schemes that we have almost fell into through decades and decades of financial engineering that we're all complicit in contributing to. And so for me, I went on a mission for the last 20 years of my life, really, since studying economics, to really find out, is it possible to opt out of the financial system, and can we actually enter into a choice, a system of choice that really allows us to enter an exit from traditional finance. And that's brought me to where we are today, really.
Well, we'll get into where we are today, but I think first we got to go back and look at the problems. We know about the solutions, and I can't wait to talk about those with you. But you kind of alluded to the problems in your 2012 book, Bank to the Future: Protect Your Future Before Governments Go Bust. I wrote a similar book, Financial Judo: Leverage the Crash to Your Advantage. So I have sympathy with you in terms of the task it is to write a book. But what did you mean by protecting your future before governments go bust? Governments don't go bust, do they?
Well, yeah. So I talked about that Bank to the Future was actually a fiction, non-fiction book where it was derived from the book Back to the Future, where we handed a banking almanac to the bankers of the future and politicians of the future. And we traveled back to actually real financial crises, made some changes in the financial system, and then traveled forward to the future again to see what the impact was. And inevitably, it led to a worse and worse system until eventually we reached a turning point where we have to completely reform the way money is created in our economy. And so the book was just really a way of trying to explain extremely complex parts of our financial system to the non-financial geeks. And so really that was the goal. In a nutshell, I talked about three main problems with our banking system. The first is that when you deposit your money with a bank, the bank becomes the legal owner of that money, which is the foundation of the problem. The second problem is that when they become the legal owner of your money, they spend it as they choose. And the way that they spend it is really redirecting the vast majority of money into the asset classes that they see as the lowest risk but the highest return. And really, that is the force that drives which asset classes perform. And the third is that because they own your money, because they can spend your money, they've also been given this super power, as it were, and that is the ability to create money. So most people think of governments printing money. Governments printing money only accounts for about 3% of all money in the economy. The vast majority of money in the economy is actually created by the private banking sector. and it is a digital currency. It's a digital representation of the dollar, the pound, the yuan, and it's created and it's backed by debt. And so this puts us in a debt trap, as it were, where individuals have to always take on more debt in order to have an economy. Businesses need to take on more debt to have an economy. Governments need to take on more debt in order to have an economy. And then eventually you have financial engineering and other entities like central banks taking on the debt, until eventually you end up in this one ginormous organization that owns virtually all the assets every time you financial engineer this. And because it is simply because of the way money is created and the inevitable, predictable, and guaranteed direction this takes our economy.
You were featured in Cointelegraph back in December 2017, a time in my life that was probably one of the most enjoyable periods that I can remember. That was during the Bitcoin pump, the blow off top. You said back then, Simon Dixon, Bitcoin and crypto is so many different things to so many different people. We didn't know about Bitcoin when you wrote your book, but now we do, and it really is changing the world. What does Bitcoin mean to you?
Well, so I was way back in 2010. I was trying to create a non-fractional reserve bank due to I was part of the monetary reform community, which was a precursor to the Bitcoin community, and we were all focused on what type of financial system can exist where you can opt out of that. That actually led me to speak at the very first Bitcoin conference, and I included Bitcoin in the book Bank to the Future, which was the first published book in the world to include Bitcoin.
Oh.
And so Bitcoin to me, the reason it was interesting is because there was no way. We looked at every single model. We tried to apply for licenses to create a non-fractional reserve bank, and there was simply no way of opting out of those three forces. There were, and Bitcoin became the first time that we found something that could actually do the opposite of those three problems. And that was that Bitcoin gives people the ability to own their own money. You can own Bitcoin by owning a line of code or a line of digits and numbers. You can spend it peer to peer, electronically and digitally all around the world. So you direct the flow of money without censorship in the middle. And finally, it was the hardest form of money supply that we'd ever seen. So it created digital scarcity whereby no entity in the world could actually manipulate or change the money supply. And therefore, we created the antithesis of the problems with banking. And so Bitcoin to me initially was a way of building a financial, bank essentially that was built upon money you can own, money you can spend, and a hard money supply that was apolitical and could never change.
I really didn't understand it at first. I thought it was a Ponzi scheme, like most other people, mainly because of the volatility and just how quickly suddenly you could go from riches to rags overnight. But after a while, for me, it became apparent that this was going to be the internet of money. This is what the market was settling on. It was the most trustless, immutable, decentralized ledger in the world. And that's why I keep telling my audience I don't think it's going away. Speaking of my audience, we've got live viewer questions. If folks want to get their question answered by Simon, just type it in here live. We also may take a call. But first, I got to get to my Patreon supporters, Simon. They've got a couple questions for you. Mark is asking about the how profitable is it to mine Bitcoins? You know, some folks in the gold and silver community are concerned about that. Mark writes, after it becomes unprofitable to mine for new Bitcoins, how will the Bitcoin transaction network operations be maintained? Transaction fees, how big will those fees likely be?
Yeah. So this refers to the way that Bitcoin actually works. So essentially, the way that it works is instead of having a bank or a central bank or any kind of centralized institution, miners all around the world, which are essentially people running computer programs, and it's now the largest supercomputer in the world. They verify every single transaction on the network, and they have to store a copy of all the transactions, and therefore, no one entity can be, as long as multiple entities all around the world store a copy of this, it becomes an immutable record that's physically impossible to actually take down and delete, as it were. In order to reward miners, they receive newly created Bitcoin, known as a block subsidy, essentially, and they also receive transaction fees. There's only ever going to be 21 million Bitcoins, and all of them will be mined, or almost all of them, by 2140. 18 million of them have been actually mined and created already, and there's approximately 3 million left to be mined. Mining is now an institutional grade business. So I invest in mining companies. Through Bank to the Future, I've got a portfolio of financial technology companies, exchanges, and all these different, and I'd rather invest in the companies that do it because it's no longer possible for you to fire up your laptop or invest in a few mining machines and actually make a profit. It really is a very institutionalized business now. So the profitability for the individual to invest in mining, personally, I think the best way to do that is equity in the companies that are building the infrastructure. That's my personal strategy for mining. In terms of the sustainability of the network, it does have to eventually move towards a fee-based model. Once all those Bitcoins have been mined, the only way, obviously we've got until 2140, but the only way that miners can actually sustain their operations are through the price of Bitcoin going up, because it's rarer and rarer and rarer, and the demand for it is increasing and increasing and increasing. Therefore, if you receive a few chunks or slices of Bitcoin, it covers your electricity and investment, plus transaction fees. So eventually we have to move to a transaction fee-based model, which means that Bitcoin might never, become something that, it can facilitate the vast number of transactions like a network like Visa or MasterCard might be able to do. And it might end up becoming a settlement layer with other kinds of technologies built on top of it to service that, because the Bitcoin's transaction fee might become more expensive in order to maintain the security of the network. And so the more people sending Bitcoin, the more expensive it can get. The less people using Bitcoin, the cheaper it gets, just the way the algorithm works.
Yeah, and this is why Bitcoin is not for buying a cup of coffee, just like we discovered that Viagra isn't to treat heart disease. Over time, we've found another purpose for it, and that's just fine with me, right? I think the white paper said, a peer to peer cash system, right? Now it's more like a store of wealth system. We've got James asking a question here. This is about altcoins. I put up the coin market cap screenshot while you were chatting there, Simon. James's question is, what do you think of Stellar Lumens and XRP?
So again, I'm a shareholder in over 100 companies in the industry, and one of the equity investments I've made is in Ripple Labs as a company. I prefer equity because I'm a long-term investor in the industry, and they are also the largest holders of XRP. It's actually one of the reasons why I'd invest in the company and not the token or the cryptocurrency, because XRP, unlike Bitcoin, is the vast majority of XRP is held by a company, and that company can release those coins onto the market, and therefore there's some central planning element to that. Now, as an equity investment, I like investing in the company because they're trying to do something to disrupt SWIFT and international payments, which is a disgusting system. And they also own the vast majority of the cryptocurrency XRP. So purely from an investment perspective, I like the equity rather than the token. In terms of Stellar Lumens, that's a competitor to XRP, same problem. You tend to have the problem with everything that has been created since Bitcoin is that it's always been associated with an entity, an individual, a character, which is why Bitcoin is the only shot we have at achieving the commodity-like features in order to achieve hard money. Having said that, there's other things that have come along that can confuse newbies. And it makes a really complicated thing when people start looking at coin market cap, because, for example, funded by the Bitcoin community in about 2015 was another blockchain called Ethereum, which sits at number two there. Ethereum's become a protocol for building innovative financial products, but it's got very little to do with hard money. So, in order to simplify all this, think of it like Bitcoin, due to its commodity like properties that no other cryptocurrency has, is our world's best shot at achieving sound money. Underneath that, you have protocols that might support the decentralization of other financial products. Ethereum's in lead there. Then you have things like XRP, which is trying through a company to do a different use case of disrupting the international payment system by disrupting things like Swift. And then below that, you have more and more speculative things. Some of them are trying to be Bitcoin killers, and they have no shot at achieving that from my perspective. Others are actually more like penny stocks, where they're actually, a play into a particular use case. And the further and further down you go, the more confusing it can get. And so really, it's just the first step from my perspective is actually just using Bitcoin. And then if you want to actually build a portfolio in this industry, use some sound principles in order to take a small allocation of your Bitcoin. And you might want to gamble with it and speculate on these ultra speculative things, but just recognize that you are gambling. And most of these things are connected with a particular promoter, which doesn't give it any commodity-like features to ever achieve sound money.
Yeah, that's great advice, Simon. In fact, I tell my viewers and listeners most of the time, anything with a market cap below, I don't know, 500 million is probably very speculative and may not really last and stand the test of time. So I tend to agree with the folks who say most altcoins are just designed to take your Bitcoin. We got more questions lined up here in the live chat. Also, if somebody would like to call in and say their name, where they're from, and ask Simon a question, feel free to do that. The number is in the description box below, 646-558-8656. There's the meeting ID and password. So let's go to the live chat. We've got a lot of great questions here for you. The first one coming from CB asking, how can we get the network effect that everyone will know what Bitcoin is?
Well, from my perspective, so when I spoke at the first Bitcoin conference, there was about 40 people in a room, and it really was the impossible task back then. What we saw over the years and over the decades since then is that the financial system tends to produce very good reasons for people to want to own their own money, spend their own money, and have hard money. So one of the first use cases was when, for example, there was censorship in money through use cases like WikiLeaks, where the financial system decided that you could no longer contribute to WikiLeaks, which was a legitimate organization, but for political reasons, they didn't want you to contribute. So then Bitcoin came along, and then people realized actually being able to send your own money is an interesting property of money. Then something came along like the Cyprus bail-ins in 2013, and people realized actually being able to own your own money is a very important feature. So a bunch of people come along, the Cyprus bail-ins come along, and you get a pocket of adoption of new people realizing, oh, right, I want to be able to own my own money. I want to be able to spend my own money. Fast forward to 2020, I released on my YouTube channel a video in 2010 called The Great Depression of 2020. It talked about a systemic risk event that will lead to ginormous, excessive money printing that then leads to the end of a 75-year debt cycle that will require a radical monetary reform in order to sustain itself. Now everyone's talking about QE and printing, and people are realizing, well, hold on, maybe it's interesting to have a form of money that just can't be printed, can't be created. Now, traditionally, people would look to gold, but there's actually a harder form of money, which is one that is even more scarce, and that's Bitcoin. So the traditional financial system creates all these reasons. Now, where we are today, it was really interesting. Around about 2015, the banks tried to hijack Bitcoin by repackaging it and calling it a blockchain. And so they tried to bury the word Bitcoin and say Bitcoin is bad, blockchain is good. And they all tried to create their own blockchain, saying the technology behind Bitcoin is where it's all at. And that actually had the reverse effect. It actually popularized, everyone talked about blockchain, they educated themselves, and they realized, well, Bitcoin's the only blockchain that actually does anything or work. So all these attempts to try and take Bitcoin down means that we entered by 2017 a ginormous speculative bubble where pretty much wherever I went in the world, no matter how weird or strange or small the corner of the universe was, everyone had at least heard of Bitcoin. The interesting part of that question is that most people have heard of Bitcoin, but they don't know what they think. It's a Ponzi scheme. They think it's a scam. They think it's a currency just for drug dealers. And the great part about that is that the longer people think that, the more it creates the opportunity to scoop up Bitcoin before the world realizes that it's not. And so what we've seen, the reason that I've seen my $30 Bitcoin crash to $3 and my $1,250 Bitcoin crash to $250 and my $20,000 Bitcoin crash to $3,000, and I fully expect my $100,000 Bitcoin to crash to $20,000, is because there's uncertainty in whether Bitcoin actually is a legitimate thing because the lack of education, a lack of understanding, and so therefore, it's what I call a speculative store of value. Think of gold as an actual store of value. It preserves wealth. Well, a speculative store of value is the world is speculating on whether it can become a store of value. By the time it becomes a store of value, then it becomes less speculative and a wealth preserver like gold is. It's not about generating wealth, it's about preserving wealth. And so the longer that people think that, the price mechanism means that you get the opportunity to speculate on whether Bitcoin can become a store of value, which has produced over the last 10 years 9 million% returns because it went from 40 people believing that it could be to millions of people believing that it could be. And eventually it will reach a stage, from my speculation, that it will become the hardest, scarcest form of money the world has ever seen.
I'm looking forward to the day that the naysayers say, you see, it crashed from 100,000 down to 20,000. It can't be money. We can expect that for sure, Simon. RD chiming in. What does Simon think about BlockFi and other interest-bearing wallets? Thanks, RD, for the question over on Periscope.
So I'm an investor in many companies that are performing in the collateralized lending markets, and BlockFi is one of those companies. I'm not a shareholder in that one. I missed that one actually. We were trying to work with them, but the VCs said that we couldn't. They didn't let us in, unfortunately. But it's about understanding this difference between owning your own Bitcoin and putting your own Bitcoin in the equivalent of a Bitcoin bank. So the vast majority of your Bitcoin, once you've trained yourself in the basics of security, the best way to store Bitcoin is take advantage of the ability to own them. There is a problem with owning your own money, just like owning your own gold. There's a real cost to actually storing gold, so therefore it's like a negative yield. But what you can do with a percentage of your Bitcoin, and I wouldn't encourage people to do it with all their Bitcoin, is you can actually get on the right side. So I personally, as I worked as a market maker in investment banking, I know that 90% of all traders lose money in the markets because they're, excessive gambling and the types of behavior that trading drives people into. It's the type of behavior that makes people say, "What's the next Bitcoin?" This type of behavior is what I've seen over the last 10 years. People that were there right from the beginning have wiped out all of their wealth just through these excessive bad habits. But the interesting thing about services like BlockFi is there are people out there that are willing to collateralize and put their Bitcoin as collateral in order to borrow funds that they can then speculate with and do margin trading. And that actually produces the opportunity to get a pretty secure loan but you have to take counterparty risk. And by counterparty risk, it's just like a bank once you're at that stage. They can, we've seen with exchanges, for example, that sometimes once you've deposited at an exchange, although it's in your name, it's still their money. The exchange can run away with that money. They can spend it as they choose, and they can even make up additional balances and engage in fractional reserve Bitcoin. So you just have to appreciate. And so the way that I do this is I really believe in the power of things like compounded interest in order to take your Bitcoin, earn more Bitcoin, and take advantage of the fact that people want to speculate, and you can earn the interest on their speculation. But make sure you do it as part of a risk managed approach. So I wouldn't put all my Bitcoin and lend it, but I'd certainly put some of my Bitcoin. And again, you need to do your research. So it's really about understanding how much you want to put on the line, and then what the real risks are when you put those on the line, because there's still a real possibility that that organization can blow up and you end up with no Bitcoin.
We're talking to Simon Dixon here. For anyone who tuned in late, I've got the link to his Twitter handle in the description box below. Also, you need to click on his link that takes you over to @BankToTheFuture. Check him out there. Simon, tell us about what you're doing there, and also give us your final word and where else you would direct folks to learn more about yourself.
So I've been, for the last decade, I've unfortunately, because Bank to the Future, because it's all securities, I've only been able to work with professional, sophisticated, high net worth. We've got one of the 85,000 largest community that have built significant wealth in that. But because of that, by seeing 85,000 investors over a 10-year period in the highest performing asset class in history, we've seen the types of things that people do to lose, that have led to them losing money or making money. And when this lockdown started to get really bad, and the Great Depression of 2020, from my perspective, is now locked in, I decided I wanted to create a lot more content on YouTube. So I all of my videos, including speaking at the first Bitcoin conference and the pre-Bitcoin videos, are all on my YouTube channel, Simon Dixon. But more recently, I got very aggressive with making sure that people can actually navigate what's coming ahead. When we enter into a renegotiation of our monetary system, people are going to have to really protect themselves from a lot of eventualities, whether that be inflation, deflation, economic growth, economic decline. These are real things that people need to consider, and even a complete protection from the implosion of the financial system and other things that I've talked about, which is the problems with central bank digital currencies and what comes next. So one of the things I've decided to do recently is I wanted to create an example of exactly how you can build a portfolio in this industry and what I will be doing with my money in the Great Depression of 2020. So I'm taking $1 million of my personal savings and pretending that I'm investing that from scratch today, and I will be investing it for real. And just so that people can see what I would be doing. So we're going to release a free video series on that. The other thing is that those who don't have savings but have an income, I'm going to show what I would do if I had zero savings and just a percentage of my income over the Great Depression of the 2020s and beyond, so that people can combat some of these Ponzi schemes that are coming up, like pension schemes and all sorts of stuff that I think we're going to have over the years ahead. So I'm really excited about bringing that to market, and I've been working really hard on producing something really valuable for people. Then we'll probably release a full-blown course on that. So I'll make sure that we reach out to you as well, so that we can actually figure out if this is something of value to your audience as well.
Perfect. Yeah, we'll be glad to have you back on. You're talking about things like the Greater Depression. I use that term in my book. I think I stole it from Doug Casey. He's probably now calling it the Greatest Depression. So you're like a brother from another mother. I like what you're saying. Stay right there for 1 second so I can give you a proper goodbye. I just got to close the show here, Simon. If folks want to help the show, you know what to do. It's real easy. Just give us a 5-star review over on iTunes. Hit that 5-star button, write us a review, and we'll read it live here on the air. In fact, I got one. If I can pull it up real quick, it just came in. This helps push the show up the ladder so more people can learn about us. Many thanks from B Trout writes, great teachers, very understandable and educational for the beginner. Crypto, metals, and fiat. Many thanks for that, B Trout. We're going to be back tomorrow. More sound money, free markets, real economics. I'm trying to get the content out. These are uncertain times, and we need guys like Simon to tell us what's going to happen. All right, see you later, everybody.
Kennedy Financial.
Hello, everybody. Really appreciate you watching that video. Hope you enjoyed the content and you got a lot out of it. If you'd like to get a lot more, then please do subscribe to my YouTube channel. Hit the subscribe button, hit the bell symbol, and YouTube will send you a notification every time. I'm also giving content on Twitter at Simon Dixon Twit, so you can follow me there. Over the last 10 years since I've been involved in the industry, from speaking at the very first Bitcoin conference in the world to actually before that, when I was involved in presentations for the banking and monetary reform community, I've always been focused on working with the high net worth investors at Bank to the Future and investing in the crypto companies and Bitcoin and FinTech companies that made this industry. That meant that I never really focused on building a following because I really just focused on the relationships that I built. But now there's so much financial uncertainty. There's so much challenges that people are experiencing in both the economy and their personal financial situation that I really want to focus on making sure that more and more people get these messages. If you leave a comment under this video, let me know what you'd like to see in future videos. And also subscribe to the channel, and I'll make sure that I'm giving you the best information, the best thinking I've got, which regularly changes as this financial system unfolds. To get that information, subscribe, get the notifications, follow me on Twitter, like, share, so that more people can get this message. And I'll make sure that you're on top of the information curve as this financial system unfolds. And remember, no matter how bad it gets, you're alive at one of the most exciting times in financial history. Peace.